The market was able to eke out yet another gain today after the impressive rally that we've seen over the last week and a half off of these lows between the 575 and 580 level. SPY closed at 609.75 and we're actually trading a little lower here in after hours 609.32 currently. And if you recall from yesterday's video, we discussed this 605 to 610 zone on the SPY specifically being a congestion zone. If we go back to the beginning of December, you can see we bounced up against this 610 level between 605 and 610 multiple times before finally rejecting. And we're seeing a similar setup as we head into the meaty part of earnings season. And so we're exercising a little bit of caution here, locking in profits where we can in our portfolio, which by the way, you can follow in our community Discord, link in the description below. Even though the market is clearly extended, we are in positive gamma exposure territory. The zero GEX level has been hovering between 600 and 603 for the last several trading sessions. So we're clearly in positive gamma exposure territory. That is a buy the dip environment. And so we are expecting a dip to ensue within the next couple of trading sessions. And that's just based off of all the gamma exposure that is concentrated basically between 605 and 610. So this is going to be a lot of dealer selling pressure kicking in here at these levels, potentially causing at least a slight retracement over the next few trading sessions. So that's something that we are watching for very closely. Switching over to the S&P 500, I did notice that gamma exposure both at the 6150 and the 6200 level is growing on the S&P 500. That's a fairly new development that we've seen over the last trading session or two. And so even if we did see a rejection here back down towards the 6000 level or even a shallow rejection, just filling this most recent gap, I would expect as more volume comes in and more market participants begin positioning at these higher strikes, that this dip would get bought for the next leg higher. And of course, that would be helped, especially if we have a better than expected earnings season. That could really make any dip in this area be a really juicy buying opportunity. Now, if you've been following us for a while, you know that we like to hedge our risk. And so our portfolio actually has a couple of different hedges, both on the SPY and the Qs, and we are aiming to basically protect ourselves in the case that our bullish thesis is wrong and that this bounce scenario does not take place. So if that doesn't happen and we actually have a breakdown back towards the recent lows, we want to be hedged. We want to aim to buy inexpensive hedge protection, which will protect the majority of our portfolio in the case that we are wrong. And so that's how we're playing this. We think the odds are actually to the upside. However, in the case that we're wrong and earnings come out worse than expected, we at least have some hedge protection and maybe we'll even profit a little bit in that scenario as well. Switching gears here to Bitcoin trading just under 105,000. We mentioned a couple of videos ago that this was likely to see a little bit of consolidation around this 105 to 108,000 level. The 108,000 level was a previous high. And so we basically tagged that again a couple of days ago and now have been consolidating in this area. But when I look at the gamma exposure data, we've got large gamma exposure still concentrated at the 110,000 strike. We still have decent volume coming in at that level every single day in the options market. We also have gamma exposure concentrated at the 120,000 strike. So if this consolidation continues, eventually these gamma effects will start to override this consolidation as more and more volume continues to come in. So if that does happen, then we could see price eventually break out of this zone, tag the 110,000, and then 120,000 would be our next target. And of course, this could take several weeks, maybe even a month or two to play out. But that's basically a quick review of the data in terms of gamma exposure. Let's take a look at Ethereum. Ethereum not doing quite as well as Bitcoin, has really been struggling for the last month in this kind of nasty downtrend. We're back into neutral territory in terms of gamma exposure. We're right at the zero gamma exposure level. We have two large gamma exposure concentrations. One is right where we're trading now at the 3350 level, and the other is up here at the 3800 level. When I look at the volume, it looks to be fairly dispersed both on the upside and the downside. And so at this point, there's really no clear direction from the options market, at least, as to the next direction for Ethereum. So just from a technical perspective, we would need to see a breakout out of this downtrend channel that has formed over the last month. Next, let's take a look at IWM. IWM has been quietly trading higher for the last week and a half, now trading nearly at 229. We hit lows below 215 just about 10 days ago. This was actually our lower dealer cluster zone here. We bounced out of that zone pretty sharply and have been in a pretty decent uptrend along with the rest of the market. I believe IWM is outperforming, if I'm not mistaken, over the last 5 or 6 trading sessions. We're coming into an upper dealer cluster zone around the 230 strike. However, I am seeing gamma exposure growing at 235 and 240. So similar to the other major indices and index ETFs that we're watching, there could be some consolidation, some rejection here back to the 0 gamma exposure level. I would expect that to be bought before potentially continuing to another leg higher. So that's something we're going to be watching very closely in IWM. It does appear that it has broken out of this sharp downtrend that it's been in for the last couple of months. Next, let's take a look at Palantir. Palantir getting back near the 80 strike. We've tagged this level at least 3 times prior to today's trading session back at the beginning of December, right around Christmas, right around New Year's, and here we are approaching that level yet again. This gamma exposure concentration at the 80 strike has basically been sitting here for the last 6-7 weeks, and without fail, we continue to come back up into that level. We see volume continuing to come in at that level, and so this is why we use gamma exposure data. Of course, you have pullbacks in the market. That is going to happen, but as long as the gamma exposure is staying there, your odds are increased, especially as volume continues to come in the options market and open interest builds at these higher strikes. You often will have further and further attempts back into these major gamma exposure levels. That's how we play it. It's not a guarantee, but if you manage your risk properly, it gives you viable targets in the options market, which you can leverage. And so that's one of the great features of gamma exposure data. And that's basically how we use it. Really nice example here on Palantir, hitting this major gamma exposure concentration multiple times over the last 6 weeks. Next, let's take a look at Netflix. Netflix had earnings a couple of days ago, hit the 1,000 level. As you can see, this was the largest gamma exposure concentration. If you go back to our videos over the last month or so, this 1,000 strike has had the largest gamma exposure concentration, or at least the second largest gamma exposure concentration for many, many weeks. And so it took some time to play out. Obviously, we had a pullback here. But this was leading up into earnings. If you wanted to make a speculative play prior to earnings for that 1,000 level, you certainly had multiple chances, and very interesting to see Netflix hitting that level the morning after earnings. And just to be clear, earnings are always a toss-up. You can never know with certainty how the market's going to respond to the earnings release. But in this case, market participants were piling in at the 1,000 strike. So after the better than expected earnings, the market, of course, gravitated right into that concentration level at 1,000. And if you guys are interested in accessing our gamma exposure dashboard and our option flow analytics tools, head on over to geeksoffinance.com. By the way, we are running a special $300 off our yearly portfolio manager tier subscription. Use code WINTER2025 at checkout. You'll also get access to our community Discord. We have a very vibrant community with a lot of great traders sharing their own strategies every single trading session. You definitely don't want to miss that. Link in the description below. Thanks so much, everybody, for watching, and we'll see you guys in the next video.